Quantum computing stocks are having a roller coaster week. One moment they're soaring by 30%, and the next, major CEOs like Mark Zuckerberg and Jensen Huang are throwing cold water on the hype. So, is quantum computing the next big thing, or just a far-off dream? Let's break it all down.
Hi.
In today's video, we're going to explore the fascinating and sometimes confusing world of quantum computing stocks. Are they a golden ticket for early investors, or are we jumping the gun on this tech revolution? Thank you for watching, and please subscribe to my channel, TheFinanceSavvy, for more updates and insights on the latest market trends. Got questions? Feel free to reach out in the comments below. Let's dive into the video. The quantum computing hype versus reality. Let's start with the news that's been shaking the markets. Quantum computing stocks saw dramatic jumps earlier this week. Rigetti Computing, RGTI, soared by almost 30% at one point. Quantum Computing Incorporated, QUBT, shot up by over 53%. D-Wave Quantum, QBTS, gained 17%, and IonQ, rose by 2%. But don't pop the champagne just yet. By midday, some of those gains had started to fade. Rigetti was up just 13%. D-Wave 9%, and Quantum Computing Incorporated about 6%. IonQ even dipped into negative territory, down over 2%. What caused this roller coaster? Two of the tech industry's biggest names, Nvidia CEO Jensen Huang and Meta CEO Mark Zuckerberg, publicly voiced doubts about the near-term potential of quantum computing. Zuckerberg's quantum comments. First, let's talk about Mark Zuckerberg. While on the Joe Rogan podcast last week, Zuckerberg admitted he's no quantum expert, but said something that rattled investors. My understanding is that quantum computing is still really far off from being a very useful paradigm. It's a decade plus out. His remarks sent shares of quantum computing companies like D-Wave and Rigetti plummeting by over 25%. Nvidia's take, 15 years? 30 years? Somewhere in between? Then came Nvidia's Jensen Huang, who doubled down on the cautious outlook during the company's Financial Analyst Day at CES. He predicted that if you said 15 years for very useful quantum computers, that would probably be on the early side. If you said 30, that's probably on the late side. But if you picked 20, a whole bunch of us would believe it. This isn't just any CEO talking. Nvidia is the king of AI hardware and a big player in quantum research. Huang's comments were enough to spook the market, sending quantum stocks tumbling even further. The pushback from quantum computing companies. But the story doesn't end there. Quantum computing companies, understandably, aren't taking this skepticism lying down. D-Wave CEO Alan Baratz fired back, saying Jensen Huang simply doesn't understand quantum computing. Baratz explained that D-Wave's approach is different. Unlike competitors who are still working on theoretical models, D-Wave claims it's already delivering commercial quantum solutions. Baratz insists that D-Wave is years ahead of its peers and is already solving real-world problems with quantum computing. This is where things get interesting. While CEOs like Zuckerberg and Huang suggest that practical quantum computing is decades away, companies like D-Wave, Rigetti, and IonQ are already selling their technology to businesses. The opportunity and the risks. Here's the million-dollar question. Should you invest in quantum computing stocks now? There's no denying the potential. Quantum computers have the ability to solve complex problems, like drug discovery, logistics, and encryption, that would take traditional computers thousands of years. The possibilities are mind-blowing, and whoever cracks the quantum code first could dominate entire industries. But here's the catch. The technology is still in its infancy. Even with companies like D-Wave claiming they're ready for the big leagues, most experts agree that we're at least a decade away from widespread adoption. That means investing in quantum computing stocks today is a high-risk, high-reward play. If these companies deliver on their promises, early investors could see exponential gains. But if the skeptics are right, these stocks could be stuck in neutral, or worse, for years to come. And while we're on the subject of quantum computers, let's not overlook another key player flying under the radar. Palantir made waves in the tech and defense world, but is there a new rising star? Wall Street veteran Stephen Guilfoyle, who nailed Palantir's success early on, now has his eyes on Kratos Defense. Could this be the next big thing in military and AI technology? Let's find out.
Hi.
In today's video, we're going to explore Kratos Defense and why some experts believe it could be the next big player in defense and AI. We'll dive into their cutting-edge technology, recent Pentagon contracts, and whether the stock is worth your attention in 2025. Thank you for watching, and please subscribe to my channel, TheFinanceSavvy, for more insights into the world of finance and investing. Got questions or thoughts? Drop them in the comments below. Now, let's dive into the video. Why Kratos Defense is turning heads in 2025. Palantir's legacy and the search for what's next. First, let's set the stage. Palantir has become a tech giant, known for its advanced AI-driven analytics and its impressive client list, including the U.S. government. But after a meteoric rise, its valuation and stock dips have left investors wondering, what's the next Palantir-like opportunity? Enter Kratos Defense, KTOS. This San Diego-based company focuses on cutting-edge military technologies, from autonomous drones to advanced satellite communications, and yes, they've also integrated AI into their systems. Think of Kratos as the embodiment of its namesake from Greek mythology, strength and power. What makes Kratos stand out? Kratos is not just another defense contractor. They're shaping the future of warfare with innovations like autonomous aerial drones capable of adapting to mission changes in real time. Their AI-driven technology allows drones to operate with minimal human intervention, which is a game-changer in modern military strategy. One of Kratos' biggest strengths is its ability to anticipate future needs. Case in point, their recent 5-year contract with the Pentagon to develop hypersonic flight testing technology. This deal, announced on January 6, 2025, is worth a potential $1.45 billion and could accelerate the adoption of hypersonic technology in U.S. military aircraft. The stock's performance, a comeback story. Kratos stock has had its ups and downs. Back in the early days, the stock surged thanks to its potential in the drone space, but increased competition slowed its momentum. However, things have turned around. In 2023, Kratos nearly doubled in value, gaining 96.6%, followed by another 30% increase in 2024. And now, just a few weeks into 2025, the stock is already up 16%, thanks largely to their Pentagon contract. Wall Street analysts are keeping a close eye, with some predicting the stock could climb as high as $35. Kratos Financial Health, a look under the hood. When it comes to financials, Kratos is holding its own. Here are some key figures from their latest quarterly report. Revenue, $275.9 million, a slight increase from the previous year. Cash reserves, $301.5 million, which puts them in a strong position to fund future projects. Current and quick ratios, 3.22 and 2.61, respectively, far above the benchmark of 1. This means Kratos has no trouble covering short-term liabilities. In other words, the company is financially solid and positioned for growth, especially with its recent Pentagon contracts. The analyst take, a mixed bag. Not everyone on Wall Street is shouting buy just yet. While Raymond James sees Kratos' hypersonic contract as a potential game-changer, other firms like Jefferies are taking a more cautious approach. Jefferies recently lowered its price target for Kratos to $29, citing a need for more catalysts to drive growth. Still, for investors willing to take on some risk, Kratos represents an exciting opportunity in a fast-evolving sector. Should you buy Kratos stock? So, is Kratos the next Palantir? Maybe. The company has a lot going for it: groundbreaking technology, strong government contracts, and a solid financial foundation. But like any investment, there are risks. The defense and drone space is highly competitive, and Kratos will need to keep innovating to stay ahead. If you're a long-term investor who believes in the future of military and AI technologies, Kratos might be worth a closer look. Just remember to do your homework and never invest more than you can afford to lose. Conclusion. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to The Finance Savvy for more insights into investing, emerging technologies, and market trends. What do you think about Kratos Defense? Are you buying, holding, or staying on the sidelines? Let me know in the comments below. I'd love to hear your thoughts. Until next time, happy investing.